Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. Today is Tuesday, May 16th, 7:15 a.m. local time. I just finished having my daily morning brief video with my team on my Discord, on my premium channel for our daily setup. See how we're gonna make, what trades are we gonna make for today, what direction I believe we're going to be heading, and then we trade accordingly. So I want to take this opportunity. I put a tweet out, I think it was on Monday or Tuesday, for my Telegram group to pick a coin, an altcoin that they like, and I was going to TA. It was going to be one coin with the most votes, but since that took so long to make the video, I'm going to actually do the majority of what you guys asked. So rather than just one coin, I'm going to go through all of these. The only requirement that I have is that they're on TradingView. I'm not going to go to DEX and get those really super degen coins because those are hard to TA, to be honest with you. They're just based on hype and FOMO, nothing else. So I'm not going to get into the super degen coins. I mean, not that there isn't degen coins on TradingView, but by the time I hit TradingView, they have a little bit more structure and they are typically easier to TA. You understand the flows of the market a little bit better versus those straight, give me one candle for 20,000% and then try to see where that's going to land. That's crazy. Okay, so let's start with this. I've got somebody here. The first post that I see here is space. So space. Let's see, what is right here? Let's see, space. Is this on USDT? All right, there it is on MEX, on Gate.io. I don't know who's going to have the most liquidity, but I'm going to say, okay, I'm going to look at MEX, but I also want to see just Gate.io real quick to see if Gate.io has more data. Nope, it has less data. Okay, that's what I figured. I like going for the bigger exchanges for that reason. Let me see if BitGet has anything there. Nope, MEX is the best. That's why I like it. Okay, here we go. So what do we get from here? Now, keep in mind that I don't know anything about fundamentals. I don't know anything about any MA, so any market events, fundamental events. And the last video I did a request from somebody and he got all butthurt. I don't know if you guys remember that. When I look at something, I'm a TA trader. I don't know anything about your fundamentals. So if you're going to get butthurt, you're going to start crying over it, be ready to get blocked and get kicked out of my get kicked out of the Telegram group because I'm giving you my opinion. It doesn't mean it's going to happen. It's just how I view it. Some of the parameters, some of the fibs that I look at tell me certain things, and based on those probabilities, that's what I'm going to tell you. I don't know if it's going to. I don't know that you're married to it. I don't know if you're underwater on it and you need to hear that it's going to go to the moon. That's not my concern. My concern is looking at the TA and then telling you what I feel, or what not feel, but what the charts tell me based on the probabilities. So let's look at something like this here. This obviously is a new coin. Had a breakout in here when it first came out. Did a nice retracement. So based on that retracement is what I like to start focusing on it. So let's look at this here. Let's grab this here. Let's see, what did it do? How did it respect the fibs? Beautiful. Look at that. Double touch on 706. So for my fib count on a let me silence my phone for a second. Okay. Based on the fib count that I use for retracement, for deeper retracements instead of continuation rules, there's 3 fib settings that I use. 618, 706, 786. My favorite is 0.706. It's not a technical Fibonacci like the 618 and 786, but it's a fib that I utilize and I love it, and it's my favorite for a reason. It's where the majority of the time we pivot on 706. We don't pivot on 706, 618. We don't pivot on 786 as much as we do with 706. And this is for the majors because I trade majors. I don't trade shit coins. And in the majors, that's where it tends to pivot the most. Okay, so on this one here, we had a nice pivot. Had a nice move to the upside, a nice little bounce here on the weekly. Let me take a look at the daily real quick here. I just want to see what this coin did, how it bounced, where it bounced from. Okay, perfect. Let me grab here. All right, let's see here. Where did we go? All right, let me see how well the TA was respected on here. Let me go a little bit. I think I have to go to 300, a little bit further. All right. And core, okay, perfect. So let me see what it did. Okay, so we came right up to 2.618, 3.64. Deviation above 4.669, had the correction back. Okay, perfect. All right, great. So we didn't quite make it up to the completion of this predictive fib cut to the upside, which would have been at $50. However, it did go up to 4.69. We went halfway up there, and obviously, as you can see, it just collapsed from there. But because I don't know the FA or the MA, I don't know anything about this project. All I can look at the TA, figure out. For me, I'm going to assume, like everything else, Bitcoin started to drop. Everything else is going to drop, and they're going to bleed harder. So when I see something like this, I'm not that concerned about it when I'm looking at an altcoin, because I know that most altcoins, the mid to lower cap ones, better said, are going to bleed 3 to 1. So for every 1% that Bitcoin drops, these low caps drop 3%. That's for the 3 to 1 ratio. The higher cap ones, they usually bleed 2 to 1. The mid caps 2 to 1, and the high caps, which is not too many of those, they sometimes go 1 to 1.5 per Bitcoin's drop. So that's how I view it. So this doesn't really concern me and say, oh, this is over, it's crashed, unless a project literally folded and closed its doors. This is opportunity. That's how I view it. But it's an opportunity that I would allow myself to take based on confirmation. Because if you would have taken that opportunity here, or here, or here, or here, you would be underwater a lot. So confirmation for me means, where's support? Where is this move going to end, and where are the market makers going to step in and say, okay, here is value. Here is what I want to buy. So what I'm going to do right now is I want to extend this over, and I just want to see if this fib is still, yeah, it is. Beautiful. Okay, so we can utilize this one right here. We went right back into the same area where the market maker stepped up, consolidated, and said, okay, let's go. Let's go. And that is where we're at right now. And if you look at the price action, we've been there for about a week already. For about a week, right in this area here. So based on the TA, I will say, okay, you know what? It looks like we found a nice area. Should I step in and start trading this? If you like it, you're asking me for it. Yeah, I would. Why? Because we have the same signatures. However, I'm going to start with 10% of my bag. So if I had $100 that I want to put it on this, I'm going to put $10. There's something that I do every morning when I do my morning brief videos is a disclaimer. And I did not do it on this one here. So rather than starting the video all over again, I'm going to start my disclaimer now before I go any further on any other coin, or before I give you my opinion on this coin. So just hear me out. It's a what do you call it? I don't want to say exaggerated, but it's a funny disclaimer, but it protects me. It protects me from all the crybabies and all the people who can't take responsibility for their own trades. I am fully protected. So hear me out. I am not a financial advisor. This is not financial advice. I am wrong 99.9% of the time. So if you use real money and you follow me, you have a 99.9% chance of losing it all. This is for entertainment purposes only. Consider this game theory. Anything you trade is on paper trade, monopoly money. All right? So I've got to be over the top because, again, I need to protect myself from the crybabies. I've dealt with crybabies since I've been in this space, and it's ridiculous. So I want to make sure that if you follow me, and that was on you, I told you you're going to lose. So this is just my opinion. Now, in a make-believe world, if I was going to trade this, what I would do is I would wait for support. And guess what? To me, this is support. So I would want to, if I like this coin, I research this coin, there's a reason I'm buying it, the reason you're asking me, and I'm going to assume that you did the homework on it and there's a reason why you want it. And if that reason is good enough, then step in with 10%. Step in with 10%. And have a plan. Have a plan that if it does go down, are you willing to put another 10% in? Or are you willing to say, you know what, I'm just going to leave it alone and I'm going to wait to see what it does? Because obviously everything I talk about here is on spot, not on leverage. Not on leverage. I don't even know if this has leverage, but it's all on spot. So this can go down, further down. You're not going to lose anything if you're on spot. You're just going to lose some value temporarily. And if you believe that it's going to go higher, they're going to release what they're going to release, or they're going to live up to their promises to the roadmap, then you bought the bottom. You bought the current bottom. Not that you can't bottom out anymore, but this is a good spot. You came right back to the same spot where the market maker stepped up and gave you that nice little run. So where would you put your next allocation? Well, here's what I would want to do. I'd want to look at this here, and I'd want to look for prior support to understand where my next resistance point is going to be. And why is that important? Because that resistance point is going to then mark an area that you overcame and reclaimed. And when you reclaim an area, you have a higher probability that it's going to continue to go. You have to understand that this is a game of probability, not possibilities. Anything is possible, but what's going to be probable? When you go to a casino in Vegas, you try to play your hand, whatever game you play, with the greatest probability on your side. Same thing with this here. So if I'm looking at this here, and I notice an area here of support, we lost it. We have another area of support, which again kind of goes back to my comment before. I hope that this holds, and it has good record that it does. It's not guaranteed, just like it wasn't here, and it went to the next level down. However, if I step in with 10% and I reach and I get up here, I'm going to expect a rejection. So this is going to be the first test of this coin, whether it's going to reclaim it or it's going to come back and push back, which isn't a bad thing either. Pay attention to the time frame. This is a daily time frame. So a move up to here is significant. From here to here is not significant if you're looking at an hourly time frame. That's a small move. And the price would be different as well. The price difference would be different. So pay attention to the time frame because that matters. If I get resistance here, is it over? No. What would I be looking for? I'd be looking for market structure shift. Obviously, we're just in a straight downward spiral. But at some point, when a asset turns around, I pay attention to the market structure. So when I'm looking for a low, I'm looking for a high, and more importantly, I'm looking for a higher low that could hopefully lead into a higher high, reversing the downward move. Now, one higher high or two higher high doesn't guarantee anything, but it starts to shift the probability. So let's walk through this here. If we were going to go and put a move up into here, because there's not much resistance here, very little resistance. I mean, there may be a little bit here, but here is where in the local area, this is where the resistance is more likely going to lay. So what I would want to do is then I would put a fib from here into this low. And the first thing I'd use a continuation rule. A continuation rule for me, it's a template that I have set up, and it's a 382.50. And what that does is that it allows me to look for a higher low probability. When you come into continuation rule, you normally get a bounce, meaning that it's a quick stop and a continuation. That's why I call it continuation rule. Opposed to like a reload fib, where if it comes down, if it invalidates here by closing a full candle, opening a full candle underneath here, because sometimes you'll get a close and immediate, it was just a deviation, immediate push up, that's just a deviation. But if I get a full candle below 0.50, it's invalidated. And in that case, I just switch this over to a reload zone. And then I'm expecting the price to hopefully hold here, but it's not going to be a quick bounce. It's more likely going to be a consolidation. It's going to be here a little bit longer than it would have been on a continuation roll. That's just some of the ways that I play these moves. So going back to what I was saying here, we come back into here, 382.50, establish a higher low, then I'm going to be looking for a higher high. So let's just say, for instance, we go back into the 0.50, which is commonly known as a discount zone. Basically, you give back 50% of that move, and people like to buy 50% discounts. All right, so if it were to do that, and again, this is just all hypothetical, then I can at least put a a harmonic pattern, kind of just giving me an idea of where this next move is going to end and where resistance, and can I find confluence for the next area of resistance. And again, next area of resistance, when I'm coming from the underside of a drop, it's going to be prior support. Here, you can see where prior support lays, right in this area here. I like these candle bodies. These candle bodies gave me some wicks as well. And I'm not paying attention to this as much, but this to me has more merit than this, which they're right there. They're right there. But again, I'm always looking for prior support. And look, we have a very good confluence with a harmonic pattern. And again, this is not 100% because we could bounce off 382, shifting this to go a little bit higher. But typically, when we come out of such a deep retracement, these bounces and the give and the takebacks are going to be a little bit more significant. So I'm going to expect this to have a higher probability of hitting 0.50. Once this shift begins, then you can feel more confident to add to your position that you bought here. So a reclaim of this, I would feel confident to start allocating more funds into this here. On each accomplishment, I would continue to want to add. But keep in mind that you want to scale into this, because often what ends up happening, because we're looking at the higher time frame, is that we end up getting a market structure that I love to look at. I love to play on the higher time frames, and it also plays out on the lower time frames, but it also plays on the higher time frames, and that's a double bottom, a W. So this move up here on a higher time frame could just be the inside of a W, which means that we're going to come back down and we're going to revisit this area here. And you need to understand that, because if you don't understand that and you're not prepared, you might make a hasty decision and sell your bag down here thinking it's going to go lower, when all it's doing is setting up for a beautiful bullish market structure for a nice breakout and a nice completion, which would be up here. You see this consolidation and this drop? This is where the W would end. So this could be a macro market structure possibility, but within that macro structure, which would be something like this. Let me show you here. Let me get in here. It'd be something like this. Like that. You're going to have both bull and bear moves to get that macro structure. Trading is not easy, guys. And most of you guys listening to this you don't even know technical analysis. You just open an account and you think you're a trader. That doesn't constitute you as a trader. So it's very difficult for you to control your emotions, because that's the biggest challenge in trading. Even for experienced traders, it's going to be those emotions. So I'm trying to talk to you as slow as possible and being as specific as possible. And hopefully, I'm hoping, and this is something that most people do that are new, is they only listen to what they want to hear. And let me give you an example. They hear this and they love it because it represents a move to the upside. But they don't want to hear that I can do this for a bigger move. That they don't want to hear because it doesn't fit their bias. They need it to go higher. And a lot of the times, sadly enough, and I'm not trying to call you out, JD Crypto, this might not apply to you, but most people, when they ask me for a coin, let me done here. All right, when they ask me for a coin like this that's dropped this much, they're underwater. Why doesn't this? Oh, there we go. Meaning, they're probably holding from up here. They're probably holding from up here. And I'm sorry that you are. If you are, I don't know. But anybody listening to this who is, is going to have a harder time listening than the average Joe who just wants to know, hey, what's the possibility of this thing? I'm not holding it, but I would like to get in. You have a different mindset. You have a mindset that, all right, I'm going to make some money, where the other guy has a mindset of, how many, I just want to get out. I want my money back. My wife is pissed. I told her this is going to go to the moon. The influencer told me it's going to go to the moon. The dev said it was going to go to the moon. I'm down 80%. Oh, I need to get out. It's a different mindset. So you're very sensitive to the small moves. Nothing is going to go straight up. It's going to have a stair-step move, and you're going to freak out every time it pushes back if you don't understand the possibilities. So that's why I'm telling you that this is less likely to just do this all the way. It could, but it is going to be a bigger macro structure. Just like when we're on top, what do we normally see before a drop? We see an M pattern. That's exactly what I'm looking here. I'm trying to identify here in the reverse, in the inverse of what you normally see to the top. So if you go to the top here, look, you have an M here. This one ended up being a triple top. A triple top. Normally you see a move up here, a move down, move back up, and then you have, this one's a triple top. This pattern here, if you inverse the chart, is no different than a triple bottom. There, inverted. Look at this. 3 higher lows. That's bullish all day long. All day long. This is a beautiful setup. So I'm looking for a setup either with a W, a double bottom, or 3 higher lows. Either one of those, it's going to be bullish. That's kind of what I'm looking for here. So if you here, actually, let me prove my point real quick here. So on this move, in order to get this incredible bullish structure, look at what it had to do. It had to drop significantly, go up again, drop significantly to get us that ultimate bullish pattern. And on these drops is when most people are going to freak out, and they're going to make the hasty decision here and here, because they're going to think, oh my God, I'm now underwater again because I bought in here, I scaled in here, I scaled some more here. Now I'm underwater again. I'm going to get out. No. Pay attention to the macro view. You're buying a discount. You're buying back to where it started. If the market maker stepped up here and they stepped up against here, stepped up against again there, or here, better said, is good chance that you're going to get another move to the upside. Not guaranteed, but the probability is on your side. So I can't really go anything higher than this. Is just speculation. Right now, what I would just say is focus on this here on the daily time frame. Don't go to the hourly. The hourly is not. If you're not a day trader, and anybody asking me for a coin on Twitter is not a day trader. So just because you trade in a daily basis don't mean you're a day trader. So there's a whole set of rules and things that you need to look at as a day trader that I'm not even going into. I don't even have my full tools here. I don't have the MACDs, the RSI, the EMAs, so many different types of indicators that I use to help me on a day-to-day basis. This is a macro view on my opinion on what I think may happen. Keeping in mind that everything I say could be the complete opposite. We roll over and it goes to zero. Every coin has that possibility of going to zero. You need to understand that. All right. I just have to be really, really precise on that, guys, because you don't understand the how many idiots are out there that only listen to what they want to hear, and they don't understand what the word maybe, because they're peasants and they've never learned that they probably never even went to school, so they don't understand what a maybe means. So I just have to make sure that I cover myself for those morons that are going to be listening to this video. All right, so let's look at Telcoin. I always start at the weekly time frame. I want to see the macro view. I want to see the whole picture. In order for me to come up with a thesis, I need to see the behavior of this coin. Is this coin new? Where did this coin go? Where did it fall from? When it fell, did the market maker step in and say, hey, this is where I find value. This is where I want it. This is where I want to buy. And they will hold it. And how long do they hold it? Usually the longer the channel, the bigger the breakout. They were accumulating for a long time for a reason. They weren't doing it to help you out. No, they were doing it because they believe that this coin is going to go either back to all-time high or pull an NJ and break all-time high, which not very many coins do. I'm not going to tell you this one isn't and have 1,000 DMs saying, "Oh, you don't know anything about it." No, I don't know anything about that. I'm looking at a TA perspective and I'm looking at probabilities. And if you go back to history, the probability is a coin that ran on the last cycle has a much lower probability of breaking new all-time high. Going into a new all-time high and breaking the all-time high. That's just the math. That's just, you can do the research yourself. Many people don't know this, but you can go to CoinMarketCap, and let me actually take a quick little break here. Let me show you something real quick. Look at this. This is something that most people don't know. And before you start jumping on people's throat, do the work yourself. You go to currencies here, go to historical snapshots. You click on that, and this starts at in the year 2013. And what it does, it takes snapshots. It takes snapshots of the coin market cap for that day. So for instance, you go here to February 1st, 2015. This is what the coin market cap looked like back then. So what do we have? Bitcoin, yeah. There was no Ethereum. We have XRP, Litecoin. Okay, that's still around. BitShares, I think that's still around. I'm not quite sure. I don't know. Paycoin, I don't even know what that is. Stellar, yeah, I've heard of Stellar. That's still around. XLM. Dogecoin, that's still around. That's still around. Made Safe Coin, I don't even think that's around anymore. NXT, I don't know. Dash, yeah, that's still around. Peercoin, Namecoin, Counterparty, Newshare, any of this stuff that's still around. And I guarantee you, look, this had $7 million. So the people back then bought this up to 7 million. Do you think that people who spent money to buy this coin thought that this was going to go down or not even be around anymore? They all thought this was going to go to all time. This is never going to stop. It's going to keep on going. Everyone who is invested in a coin believes that their coin is going to go to the moon, especially if they bought the top and it went all the way to, and they rode it all the way to the bottom. It's human nature. Human nature that if you run it to the bottom, you have to believe that you're going to get your money back. You're not even worried about making money anymore. When people enter a trade, they're worried about making money. When they're underwater, they just want to break even or recover half of the funds that they lost. But my point is, look, do you recognize any of these coins that I'm sure people thought it was going to go to the moon? It was going to keep on going. It's the future. New Shares Bank, YB Coin, Nubits, Supernet, Monero's still around. I believe it is. Bybit, I don't know if that's around. BCN, that sounds familiar, but I don't know. I don't play DGen coins. I don't play low cap. I don't play these old coins. I play high market cap coins, but that's just my style. Black Coin, nope, I don't know that. Bitcoin Dark, Storj, I think that's still around. Tilecoin, Quark, Dnotes, BitUSA. I mean, look, it goes on and on. Any of these coins are familiar now? Are they still around? Digibyte is, but the majority are not. So when you look at the coin market cap today, the majority of those will not be here in 5 years or in 7 years. And you're never going to recover your funds if you came in on the hype and you bought the top. That's just the probability. So I just want to give you a little quick history lesson in what to expect from your coin that you're married to, or especially if you're underwater. But let's move on. Let's move forward on this here. What do we do here? This found a bottom right in here. It found a bottom here. So let me just. It found a bottom there. Found a bottom there. Slight deviation, and look at this. Look how beautiful TA works out. That's the beauty of it. Found a bottom there. Confirmed it there. We lost it. Back tested. Regained it, back test. Beautiful. And then once again, confirmed it. So we can say this is the bottom. This was the bottom. Okay, so if that is a bottom, is there a structure that tells me there's a reversal of trend. Have we done anything significant? Well, on each one of these, supposedly, we're going back to all-time high. We failed and we came right back to the bottom. Have we done anything significant? So let's see. Let's see if we can come up with anything significant. I'm going to use right here. And I'll tell you why I chose this. I'll tell you why I chose this area and what I'm trying to glean from this. When we bounced, we found an area of resistance, but often we have deviations. So what I like to do is I like looking at candle bodies. That's why you saw me pull it from here. And then I look to the right or to the left and look for confluence on other candle bodies. So there's a candle body there. There's a candle body here. That carries a lot of weight for me. And look, I just noticed these. I noticed it before. But real quick, when I went to here, I look left, I look right. I saw what I wanted to see. And then I don't worry about these wicks here. This was a deviation. It confirmed it. It fell below it. It back tested. We stay below here. But look at this. Look at this. Do you see this? We have a shift. For 2 years, this thing bounced and continued to come down and would not break this area until here, and we back tested. A back test is super important in my system of trading because it validates that the reclaim is probable. And I say probable because this can roll over and go to zero. But the probability is that we're reclaiming an area that we once had. Oh, wow, look at this. Look at that. Look how beautiful that is. Look at that same line that I used over here, right there. So we're reclaiming. Look what happened here. Look, exactly what we're doing here. Reclaimed it because there was resistance. Reclaimed it, and look what happened. That's what anyone who's holding this coin or wants to buy this coin is expecting. But just because you're expecting it doesn't mean it's going to happen. Because you have to allow the charts to validate themselves. So I can tell you that, yeah, this is great. This is the first step move. This is the first step. I'm looking for market structure. So let's talk about it. Let's see. There's the bottom of that move. We closed below the continuation rule. So what's the next thing I do? I look for, since we invalidated that, I look for the reload zone. It's going to be right there. What did I say about 706? Look at the bounce. Look at the bounce. If you don't have 706 on your FibCon, put it on there. You're going to notice 80 to 90% of the time, we pivot from 706. Pivot. That's exactly what we did. We landed on 2 points on 618, which is great ratio, but we kept on falling, and this is what caused it to pivot and say, we're going to bounce. Not that it can happen here, it can, but most of the time it's 706. But this is the important part, that we pivoted. Now, how do you project this to the upside? There's several ways of doing it. The easiest way to do it is doing this. You grab where you put your zero fib to the top of that fib, that's this move, and you put a harmonic pattern on it. It's basically an AB equals CD. Easiest way to do it is one of these lines. There's a tool for it on trading. It's real complicated. You don't need to do that. This is the simplest way, quick way of doing it. Boom. This is a very good probability that this move is going to end here for this impulse. Not that this is the top and it's going to come back down. No. Pay attention to what I'm saying. For this move, what would I expect? Somewhere around here, we're gonna end this move, and we're gonna have a correction, and we're gonna go again. After the completion of a harmonic pattern, we typically have a correction into that discount zone, the 0.50, and usually a little bit deeper into like 618. On this first leg of the harmonic pattern, typically, not always, the continuation rule applies to this, which is the higher low rule. And then on the next after the completion, the next one has a deeper retracement. On this particular one, we got a deeper retracement first. I can't help it. It is what it is. I don't control this. But here's the thing you need to also understand. When you look at a harmonic pattern, like anything else in crypto, anything else in trading, not trading, anything else in analysis, in TA, you want to find confluence. So if you snap a line at the end of this harmonic pattern, look to the left. Can you find confluence in this area to justify that this is going to be a strong area of resistance by looking at prior support? So when you look at this line to the left, you're looking at, you want to see candles that stopped here, stopped. This was support. Let's do that. Yep, it stopped. Yep, it stopped. Yep, it held support there. Yep, right there. You see that? See how that works out? Real easy stuff, guys. If you guys want to learn this, join my Discord. This is what I do. I teach you guys these tools and a lot more. This is just one, but this is I teach you guys a lot of different tools, and I have a very unique system that I've learned from a much more experienced and much more smarter traders than myself. I've utilized bits and pieces from them to come up with my own system, and I don't want to say the word master, because I don't think I've mastered anything, but I'm able to understand it very well based on how I view the market, and most importantly, the strike rate. Does my system have a good strike rate? And that's how you measure it. Does it play out more often than not? If it's a yes, then you're good. It doesn't matter what that system is, as long as it works. On the move here, guys, guess what? Again, I'm not trying to be a bear. I'm not trying to rain on your parade, but you also have to understand that every bull move has a crossroad where it turns into a bear move. Listen to what I said. Every bull move, which is what this is, will find itself in the crossroad of it becomes a bear until it's invalidated. Let me explain to you what that means. You see that right there? You see this right here? When we get to this point here, this becomes a double top. That's a bearish pattern coming out of a breakout. But once you reach here, you have the potential. And it's your job as a trader to protect your capital and realize the possibilities of what could happen. So if it gets up here in this vicinity and it starts to break down, you need to get out. You don't need to marry. You don't need to prove to the market anything. It's the other way around. The market needs to prove to you that it's worthy. By how do they do that? By invalidating this double top and finishing what it started. It needs to prove to you that it's bullish. You don't need to prove anything to it. So once you cross here, it's not 100% that it's going to complete, but you're in much better position. The probabilities are back on your side, but you don't have that much more to go either. You have to understand this structure and the harmonic pattern. I told you, this here is normally what I like to see. And there's several reasons why. The first reason is because when you have a deeper retracement here, the bounce on the harmonic pattern is not going to have a much greater higher high than the previous high. So this is the high. You want to see a higher high, a little bit higher. You don't want to see it too close to here, because what will happen is you have the possibility of rolling over. That's why this is important to me. When I see a continuation rule getting respected, it does a lot more than just make you more money. It creates a forward momentum, because now I get to move this to here. You see how much higher this is? This gives me that buffer that I need to protect my capital. When I do a TA, guys, I'm never projecting how much money I'm going to make. I'm never worried about the ROI, how much ROI. No, I don't care about the ROI, because if I do my job correctly, ROI is going to come. But more importantly, if I don't do my job correctly, it's going to cost me money. So your number one job is to protect that capital. Forget about profits. Profits will come if you do your job correctly and if you protect your profits. All right, so on Telcoin, I think it's pretty obvious here what we're basically looking for the next move. The next move, I'm going to put this back here because this actually is more applicable. All right, perfect. So everything I said here is, let me move this back here, is what you're looking for on the next move. Now, keep in mind that every time you look at an altcoin, the first thing you need to do before you look at the altcoin is that you need to look at Bitcoin. Simple as that. This could have the best possible market structure ready to break out. If Bitcoin rolls over and goes down, it's going to invalidate your setup and you're done. It's going to go back and you need to go back to the drawing board. It's going to go down, who knows where, back to the drawing board. So please keep that in mind. It's very important that you have two tabs, one for Bitcoin and one for here. Because I did my morning brief video this morning, I went in depth on Bitcoin. In my opinion, there's a high probability that we're going to continue moving forward. I have an invalidation area that if it triggers, then obviously my opinion is going to change. But until then, based on the data that I saw this morning, we're going to go higher. The probability, not the guarantee. And it's crazy because as I'm saying this, guys, read the comments. If we do roll over on Bitcoin, read the comments of what they're going to say. Oh, Bitcoin BC, you said on the video that it was going to go higher. No, I did not. I said that and again, that goes back to being a peasant, being uneducated peasants that don't know what the meanings of the words. They don't understand the word probability. They haven't been educated enough. They never left the second grade. So obviously in your second grade, you probably won't even know what probability means. And those are those ignorant traders, which is why I block a lot of people. I just block it. It's just easier. I don't like when stupid people follow me. I don't like stupid people to begin with, and I don't like when they follow me. So I usually block them. But it's just an example. But going back to what I was saying, the probability is going to be that we're going to go higher. So I believe that when it's time for the alts, because you also have to realize the pecking sequence. It's Bitcoin, Ethereum, majors, mid caps, low caps, shitcoins. I don't know where this one falls in. I just don't know. I don't know what the market cap is, so I don't know. So whatever category you know that this fits, wait your turn and look for this move. As long as Bitcoin is behaving. All right? So hopefully that answers your question. And again, this whole analysis starts all over again with new data. And you do this again and again. There's other things, like I said, look, this is some of my tools right here. But I'm not going to get into all of this. I don't need to get it. I'm not here to. I'm here to give you my opinion on a broad opinion on this. But as a day trader, I have to rely on these tools to give me the direction. So, and again, that's what my teaching Discord is. I share with you entries and exits while you're learning. So you're not sitting there waiting. It takes a long time to really become successful. It takes years to become. It's not going to happen in a couple of months. But during that time, at least you can pay. You can at least start earning. All right. So just let me get rid of these indicators. All right. So let's go ahead and move on to the next BitLars. I hope that answers your question. Electric XCP protocol. Okay, XCP, I actually have it here. I've already done the TA because we've been following this coin in my group. So we're going to be looking at. I've already been looking at this here, and basically, it's not in a good position right now. It's not. It put in a lower low. It lost the support, which I didn't like. So in my opinion, we're going to go down into here. And we're going to hopefully hold a line because this was prior resistance. You had a little deviation, but lots of resistance. So this is naturally going to be strong support. Based on the behavior and the market structure that forms on top of here will then give me a better understanding of what the probability is, whether we're going to go up or we're going to fall below it. Based on that, I don't know. But right now, it's not looking good. And the higher probability is if we don't regain at least a 706, if we don't regain this support in the near future, we're going to here. This is a quick one because, like I said, I've already been following it. Let's go to the next request. PENDLE. Let's look at that. I don't know what that is. And just so you guys know, I did say that I believe Bitcoin is going to go up. However, I believe we're going to go down first, and I'm going to share with you just a quick screenshot of what our here. I have several tabs on Bitcoin because I look at it from different angles. So this is what we went over on. I'm going to give you just a brief of what I'm looking for Bitcoin right now. On Monday, which is where this started from, on Monday, the plan was to see this come up to here. Can we make it to here by Wednesday? That was yesterday. This is where we stopped here yesterday. We stopped here. We got close to it. Not exact. I don't have a crystal ball, but I have a good idea of where we can go if things validate on the lower time frames. And things were validating, and we got close to here. We got very close. Now, this is what I'm looking for. Right here. This is our TA for today. We just covered this morning. I am looking for the continuation rule. I'm looking for this to be at a bounce area based on the 4-hour time frame, on some of the things that we saw in the 4-hour time frame. This is going to be what I'm looking for my bounce area. That's what we covered this morning. And that's what we're playing, and that's what we're trying to discern whether or not. Give me 1 second, guys. I'm going to pause this for just a second. All right, sorry about that, guys. I just needed to pause. I needed to do something here. I needed to move my stop loss on a trade. So here is what I'm looking for today. Now, this here is going to provide us a higher low because I'm looking for a higher high, but I'm looking for a proper market structure because I understand that things just don't go straight up to all-time high. No, they form a market structure based on other data, based on liquidations, based on futures. There's a lot. This is not what this video is about, but I just want to give you a quick rundown of what I'm looking for sometime today, tomorrow. Before we get higher, I'm looking for us to bounce in here and then put a higher high and then continue to go. That's why I say that if everything plays out on Bitcoin the way I believe, this is what you're going to be looking for when it's time for these alts and this category of alt to run. All right. But it doesn't mean that because I'm a bull that I'm not expecting a retracement. It's natural, but you have to understand the sequence of it. And you have to understand where it can go. A wick here and a candle body close here constitutes as a continuation rule. A break below here shifts this into a reload zone. Doesn't mean that it's not going to bounce here, but now we're going to be consolidating probably in here, still within the bounce area. Again, I'm just giving you. I spent an hour and 20 minutes. I can't. In a few minutes, I can give you what I gave them for an hour and a half. So, but at least you have an idea of what I'm looking at. Look, here's the double top. Look, here's the M pattern. Here's that M pattern I was talking about, like the W that I'm looking for on that. I forgot what coin it was, but I was looking for a W. But there it is. Look, this is the M. This is the inverse. Look, sometimes it's easier for people to see it this way because they only have eyes for the bulls. Okay, no problem. If you can only see bull, if you can only see up, inverse your chart. If you can only recognize patterns when they're going up, inverse it. It's the same thing. So what am I looking for? We're going to lose this. I'm looking for a loss here. Here's the neckline. I'm looking for a back test of that neckline, a rejection to confirm this idea. What's the invalidation? If we reclaim this and we start closing above here, we invalidate this. It's that simple. Because nothing is 100%. And no trader has a crystal ball. We don't know what's going to happen. So we have to have validation and invalidations. All right, let me go back to the again, guys, you want to learn, join my Discord, bleedingcrypto.com. Let's see, let's look for another one. Oh, Pendle. Let's go look here. PENDLE. Here we go. Pendle weekly. All right. Looks like it's a new coin. Let me just see if there's another exchange with more information. Let me see. Let me look at KuCoin. Make sure. No, it's the same thing. Okay, so I can just stay here. All right. What does this do? So let's just take a look at it. New coin. Again, if they're asking me for this, usually they're on the water and they're somewhere here, and they're dying for this to go back up so they can break even, or make money, So the way you view this, and because I'm not in it, and because I have the experience that I have, I'm not going to view this with emotion whether I'm underwater or not. I'm gonna look for the positive points because it's a bull market. I'm always going to think up. Prove to me that it's going to go down. But we're in the bear market. It's the other way around. I'm always going to assume it's going to go down. Prove to me it's going to go up. So it's the inverse because we're in a bull run, whether you want to believe it or not. All right. So first thing I want to do here is I want to see what this coin did. Give me 1 second. I want to see this move here. Now I want to see where this bottom is here. Okay, I like this bottom. We bottomed out there. We had a nice little move here. We never broke the low. So this is on the weekly. So let me get the macro view of this here. Here. Let me go into here. And then let me go here. And then I want to see how well it respected this here. Let me go to the daily. All right, so when we moved up from here, did we stop at 2.618? Let me see. Yep, right there. We stopped right on it, rejected, broke through it, back tested it. Beautiful. Everything's working out. I like seeing price action respect my system. I say my system because this is what I use. I didn't invent this. I didn't come up with this. I use this from other traders that have more experience, that are a lot smarter than me, and I get to incorporate it. I found a way to incorporate it into the system that I use with the EMAs that I use. I use the 7, 21, 50, 100, 200, and 300 EMAs. And the only MA I use is a 200 MA. Not everybody uses that. Everyone has their own soup that they like to use. That's just mine. And this particular FIP count that I use, I like to see I like to zoom in and see, did it respect it? Did it validate it? Yeah, it did. Okay, good. Why do I want to do that? Because then it's going to give me a higher probability that as we move forward, I can utilize the same FIP count to tell me where the next moves are where the probability of the next moves are going to be. In case you're wondering. Okay, so look. So this line was validated quite a few times. All right, great. 2.618. When we went higher to 3.61 to 3.64, did we stop there? Did we have some sort of resistance? If we broke above it, did it come down and back test it? I don't know. Let's look. Yep, we found the resistance. We broke above it. We came back, and now we back tested, and we're above it. Okay, great. If it did that there, on my next one, did it do the same thing on 4.669? Did we find an area of resistance and a reclaim? I don't know. Yep, we did. We went right to it, got rejection, tried it again, got rejected, flipped it, and we back tested it. Simple enough. Now that we did that, did we finish the impulse of this move? The measurement of this move is at 8.77. Did it stop near it? Did it go above it and then fall underneath it? That can happen as well. Did it validate that line at any point in time? Did it come up to that line and find support and resistance? I don't know. Let's see. It got close to it. It didn't hit exactly, but it got within a reasonable range. Especially when you're measuring a move this big, you're going to give it a little bit of leeway. Sometimes it goes above it, sometimes it falls a little bit short. But to me, this move is complete. Now, after a move like this, I'm looking for a touch to 706 into the reload zone, whether it's 618, 706, or 786, for the price to find support there before the next move to the upside. I don't know. Let's see. And I take this one here, just so you know. I'm not taking the top of this move. I'm taking here. Why here? Because this is the original move where we found a high. This is a swing failure. This is a swing failure. So the way I teach, the way I do my fibs is here. Some people will do it here. That's okay. You do you. Whatever works for you the best, you do that. You let me do what's best for me and how I trade. And that's what sometimes people just don't understand. That's the bottom of the move. To me, this is the bottom of the move. Yep, 706, we stopped and we bounced from there. That's what I wanted to see. Even before I put it, that's exactly what I told you. So I told you on every other alt that I've showed you. 706 is the area where we pivot the most. 80 to 90% of the time. Not 100%, 80 to 90. So for me, this is my favorite fib. Now, what's next? I want to see that we stop putting in lower highs and lower lows. I need to see that before feeling confident that this move is over. So we got a high, we got a low, we got a lower high, we got a lower low, we got a lower high, we got a lower low because we broke below here. And this is not the best lower high, which is good because this could be, again, I'm looking at it from the eyes of a bull. Show me a positive. What's the positive? Well, this could be a W that I love so much. Once we do this W, we come back. We can do the continuation rule, but often on a W, we back test the neckline. So we may have to go a little bit further into probably 618 or 706. And let me show you what that would look like. So this would be the end of the W, right in here, right in this area right here. Okay. So if that is the case, and we are going to go back into the neckline, here's the neckline, 618. I don't want it to go really further than this box. I want it to stay within this box. But normally, when I have a higher low, I'm looking for a continuation rule. But on a W, my rules change a little bit because I recognize that this structure often calls for a neckline backtest support. Now, remember what I told you about the inverse? Look at this W here. Here's a neckline. You see these right here? Look, there's a neckline right there. I don't know why I did that. Right there, look, that's the neckline. Look where we went. Look where we went. This is just an M, but I had to inverse it. Sometimes people, like I said, people understand the moves up. That's what this was. We came back, we back tested again, and we continue to go. No different, guys. No different. It's all about perspective. And it's all about what you're looking for and what you allow yourself to see. And I say that because when you're highly emotional, you don't allow yourself to see the full picture because you're so emotionally vested in a project. And it can not only just be for the downside, like underwater, it can be for the upside. You're so focused, I need to make $1 million, that you don't realize that you may be in a position where this thing's going to go the other way, but you're so focused on making $1 million that you don't see what's right in front of you. It's different when you separate that. When you have, I tell my group, almost, not every day, but I tell my group, I said it this morning, that's why I remembered it. I'm a better trader than anyone in my Discord. Anyone, for one reason, that I've lost more money than them. Most people are not going to admit that. Most influencers think that they sell, they sell all the tops and they buy all the bottoms, and that's how they get clicks. I don't care about clicks, guys. I've been stuck at 69,000 followers for fucking over a year. I don't give a shit because I'm not here for you. I am not here for you. Why? Because you don't pay me. I'm not vested with you. You don't make me any money. My Discord is a different group of people. They invest in themselves by paying me, and in return, I do my job by showing them and telling them the truth on how things really are. Not for clicks and bait, not to tell them how to become better traders. Now, I've lost more money than anyone else. Makes me a better trader because the more you lose, the more mistakes you make, the more you learn what not to do. And that's the important part. Like I said earlier, it's not about how much ROI you're going to make. It's how can you protect your money. It's all about mindset. Shifting that mindset from gains to protection. Forget about the gains. The gains will come if you know how to protect your capital. So, just a little side note I wanted to show you. So, PENDLE, again, I don't think it looks bad. It's in one of those gray areas where we need to hold this here. Okay, so if you're looking at this, we need to hold this. We need to make sure that we put in a W. If we don't, then we're going to be looking at holding 786. And if you look to the left, this is what's crazy about TA. Look at this. I'm gonna snap a line there. If we hold that, look left. Look at all that resistance. That's going to be a strong area of support. But think about all the millions of dollars that needed to trade here to get me to a 0.786 fib to line up with prior resistance the way this did. That is what I refer to almost every day. I call it TA porn. I love my job. I love what I do. I love how well these things work out. It's amazing to me. I've been doing this for 6 years, and every day I'm happy and I'm joyful and I'm at awe with how the mathematics work on TA. It very rarely fails. If it fails, it's on me. It's not on the math. It's on me. It's just crazy, guys. I love this stuff. I love this stuff. So who asked me for this? Let's go. Just wait and see how this resolves. Make sure that we don't put a lower low. A wick is okay because a wick is just a sweep of the stops. That's okay. But the candle body needs to close up here. Candle body closes here, more likely you're going here. And if it doesn't, and if it does put in here, look for that move. Look for that W. Look for the continuation rule until invalidated. So this is what we look for first. Look for a as a matter of fact, you know what? The continuation rule, now that I look at it, lines up with the neckline. So we may not even need to worry about putting the reload zone if it does complete this move here. But again, we're getting ahead of ourselves here. I'm just trying to give you some projections because that's what you're looking for. But that's a lot of ifs and maybes. You have to wait first. If this, then that. It's a lot of there's a lot of that in trading. If this, well, then that. If this happens, well, then that. So you have to wait for, and it's the same thing as saying, if this validates, then this. If this invalidates, well, then this. Same thing. It's just sometimes easier to say if this, then that. But again, it's all based on validations and invalidations. Doesn't matter what you want or what you think. The charts have to prove it to you. Okay, let's look at TON. T-O-N. T-O-N. I don't know who has the most, but I'm going to look at MEX. Weekly. Reset. Yep, we're good. Okay. Just let me look at one more chart just to make sure that nobody else has a better. Let me look at Qcoin. Same thing. Okay. All right, so let's look at this here. What do we got? We had a nice little breakout came out the gate. We came out the gate, so we have something to throw our fib on. I want something to throw my fib right there. I want to look for the reload zone. Boom. We respected that. We had a wick, But look at that. We never closed below 786. Beautiful. Respected that. So that was good. So what I want to do now is go into here. Go into here. I'm going to move this over. And I want to see at what point did we respect, if any, if they will respect that. Okay, so I'm going to go there, go there, go there. Now that I have this, I'm going to go to the daily time frame because there's a lot of stuff that happened within this weekly candle that I may not see. So I'm going to go to the daily. I want to see, did we respect this when we went up to it? There it is. There it is. Again, guys, I teach you this. I do these settings for a reason. They work. You don't believe me? Come check it out. Come check it out. 2.618. We stopped. We get to the 3.64. Beautiful resistance. We went above it. We broke below it. We validated, back tested this beautifully. Went back up there. We finally broke up. How did we treat 4.669? Boom, the way we need to. Resistance, resistance, flip it, confirm it, fall below it, back test it, hold it, flip it, back test it, validate the line, validate that I know what I'm talking about. Validate that this setting has merit. Did we make it up to 8.77? Did we get close to it? If we went above it, that's okay. When we came down, did we back test it and validate it? I don't know. Like the other one, close. Not quite there, close. So, what do I do now? What do I do now? Well, something like this here. On the previous one, we had a nice deep retracement. We put a fib on it for a retracement. So we're going to do the exact same thing. We're going to go back to the weekly time frame. Okay. Now, remember what I said. Continuation rule, I'm looking for a bounce. On a reload zone, I'm looking for more candles in that box. That's called consolidation. So if I go to the smaller time frames, you're going to see a lot of consolidation in there. It's a difference. Continuation is a quick move. Up, you bounce. It's a quick reaction. So let's see. I don't know. Let's look here. Here's the beginning of that move. Right here. Here's where the move began. Let's start. We have to start with continuation rule. If we close a full candle below 0.50, then I invalidate the continuation rule and I go to the reload zone. I don't know. Let's see. There's a bounce. We never closed below 0.50 and we had that strong bounce. Now, this is a perfect example of what I said, that this is now on its way for a higher high. But before you get there, you will cross an area. You will get to an area where it becomes a bearish pattern. This is a bearish pattern. This is the market smiling at you. When the market smiles at you, that is not a good sign. Because more often than not, when the market smiles at you, you're going to drop. And these drops here like to go down to 786 from my experience. So let's look at, let me hit done. So these drops will normally go to 786. Let's see where that would be at. If we do get that, but I'm in a bull market, so I'm not expecting that to begin with. Where did it go? Did I put it on there? Or no? There it goes. Okay. Okay, so let's go to the reload zone. That would be right here. But I'm in a bull market. So until it proves to me that it's going to do that, I'm not going to worry about that. I am always going to think higher, give the benefits to the bull until proven otherwise. So for me, we're going to go higher. As long as Bitcoin continues to go, no reason to think that this is not going to put a higher high. So what's the projection on something like this? Easy, same thing. Just put a harmonic pattern. Put a harmonic pattern, clone it, right there, this here. Next stop. Next stop. For me, it's going to be right in here. That's it. Simple as that. I don't have to get more. I can go more in depth and do other stuff. I don't need to. All right, just keep it real simple. Real simple. So that's what I'm looking for. Unless it invalidates. Unless it starts to form a actual structure, which means that it'll come down in here and it'll come down into probably right here and stop there. Then it breaks down, it back tests, rejection. We're going to that 786 that I was talking about. Good probability. The probability is that. So hopefully that makes sense. But for right now, guys, just look for higher high. Look for higher high until proven otherwise. Let's look at what else. Okay, somebody. Okay, I already covered XCP. So Kadoosh, I already did XCP. What's another one? PYR. Let's look at PYR. PYR USDT. PYR weekly. All right, what did this do? What is this? Let's see. Okay, was it around last cycle? No, it doesn't look like it was. So it's a new coin. All right. Let me make sure this is a new coin. I just want to look at another exchange. Let me look at KuCoin just to make sure that it matches. No, this is not. Okay, so that's why I like looking at other exchanges. Make sure it must have been new to Binance, but not new to the market, which is good. Okay, good. More data, better for us. More data. So what does it do? This had a nice move to the up, came down, valley of death. Market maker stepped in and said, I'm saying, why does it do that? I marked it there. Look, they came in and said, nope, this is where we find value. This is where we're going to keep it. This is where we're going to accumulate. Right here. So we're going to accumulate. All right, perfect. Great. Good for you. Now, let's dive in here. What can this tell us? All right, just like we did last time. So we're going to focus on this range before it broke out. This range. So for me, this range, I don't have to go there. I don't have to put a channel. Just let me put a line. I want to look. Let me look for candle bodies. Nope, a little bit lower. That's a deviation. And yep, right here. And I'll explain to you why I did that. Let me get rid of this bottom one here. Actually, you know what? I'll just make this one. I'll make this one. Oops, sorry. I'm just anal about my colors and my. Let me put this red. That's resistance. Okay, perfect. Okay. Why didn't I put it here? Because this was a deviation. Because if you look at here, we have candle bodies here. We've got candle bodies here. And we've got a lot more respect on here. And this was just a deviation. And right here, the loss of this here and the back test. So for me, that is resistance. And that is a point. Look, another candle body here. So how is that going to help me? Well, that now tells me that this is where it broke out from. So whenever something breaks out, I'm always looking to protect my capital. So what do I automatically assume? What's the next thing that comes to my brain? I need to see this back test. Because if not, yeah, great, I'm writing it. But at some point, there's a high probability it's going to back test. And I don't want to get caught way up there underwater and didn't take profit because I was too emotional that we're going back to all-time high. We didn't get an immediate back test. I'm going to be a little bit concerned. But this is the weekly time frame. Sometimes you miss things. So I want to look at the daily time frame. Go back here. There's my back test. That's the back test I wanted. It doesn't mean it can't come back to that. And often it does. Often the market will back test. It'll take off and it'll test the market. It'll say, you know what? Let's see if the bulls really are there. Let's go back to this line here that we were there for almost, 2 years? And let's see if the bulls show up again. And that's a way of the way the market makers, they take profit and they reload back in that area. So let's see. I don't know. Let's look here. Did we ever come back to that? We did. We did. I love my fucking job. I love my job. So look, there it is. Market said, hey, come back here. Come back. Not so fast, buddy. You may see this as bullish? I mean, as bearish? I don't. I don't. We had an opportunity to break and close below here. It did this. Look at the initial reaction. You need to pay attention to the details. The details. The first time it touched this back after who knows how long before it broke out. When did this break out? It broke out on November 5th, 2023. Came back 5 months later. 5 months later, look at the reaction. That means something. Came back again, still couldn't break it. Came back again, yeah, okay, we fell below it, and it's right on the line. Still not bearish to me. So let's break it down. Why are you not bearish, BC? All right. First things first, love the bounce. Great. Second thing, a runnable market. Runnable market. Third, this pattern, to me, I recognize it. And it breaks higher more often than not. This here is getting people bearish to get their bags, sell their bags, and all of a sudden, we start breaking out. We start breaking to the upside. Let me look at something here. Beautiful, beautiful. Like it. I like this. I think this is going to break to the upside. But now again, I need the market to prove it to me. I don't need to prove anything to the market. So here there's a real clear invalidation to that. That's going to be right here. Invalidation. So whatever we do, the market needs to hold this. Tested it once, tested it twice, tested it a third time. Boom, easy invalidation. We start trading below here. Next stop is here. Simple as that. No ifs, ands, or buts. Okay, well, I'm in a bull market. To me, this is going to break up. So how does a market begin to prove to me? First thing first, I need to reclaim. I need to reclaim an area of prior support that we lost and we back tested. Can I find that? Let's see here. I like this candle bodies here. So what was this? We have candle bodies close here, with support. We broke that. That was a secondary support there. We came back up here, support. We broke it, back tested it. This is the area I want to reclaim. Get me above here, and I'll consider opening a 10% position. Get me above 4.669 again, I will add to that position. You get me above here, holding, putting a bullish market structure on the smaller time frame, maybe like a W, I'm going to put the rest of my position in. Here's the problem. Most people, I'm in 100% in here. I'm in. I want the Pico bottom. I want to be like that guy on Twitter that always catches the Pico bottom. I'm going to be him. All right, go ahead. You do you. You be him. I'm not him. I'm not smart enough to be him. Unfortunately, I'm not. I'm brutally honest, which is why, again, I'm stuck at 69,000 because I don't sit there and bullshit. I'm not that good. I never catch the bottoms. But you know what? I'm tired of losing money. I'm tired of being broke. I want to be better. All right, well, how do I be better? Well, stop doing what you've been doing and start making money. How do I do that? 2 words. Protect capital. Well, 3 words, really. Proper English, 3 words. Protect your capital. It's that simple. Protect your capital. Going all in here, that's protecting your capital? Really? No. I'm waiting for it to go all the way up here to start putting in a small portion of what I have allocated here for this coin. So if I'm only going to use 5% of my overall portfolio for this coin, 5% of my overall portfolio, and then on top of that, I'm going to take 10% and put it on here, that's a very minimal risk. In a bull run, in a bull market, when there's more potential to the upside than to the downside. But if I'm wrong, I'm gonna lose 10% of a 5% allocation. That's pennies on the dollar. And that's how you start increasing your capital and switching what you've been doing. All right. And then you start, like I said, you start going up from there. And then once it goes all the way up here, you've proven it to me. And I'm going to put the rest of it here. I have a much better probability. And actually, as I'm saying that, look at this. Look at this. Look at this. Look at this W. You see a W? Look at this. This is where the W is going to end, which most likely what's going to end up happening, you're going to put a continuation rule for the next leg up. Continuation rule, boom. You come in here, that next break up here, you are then going to take this line here. You're going to go down to the 15-minute time frame, to the lower time frames if you're a day trader, smaller time frames, and you're going to look for a back test here and a continuation. That's where you go in. I like using the high time frames for the macro view, but I go to the lower time frames to execute my trades. Because just like I showed you here on the weekly, you don't see the respect on some of these things until you go dial it down a little bit. And the more you dial it down, the more precise you get, the more detailed you get. So you can look for an overall game plan on the higher time frames, but your executions and your confirmations should be in the lower time frames. That's how I play it. You don't have to do it that way. That's how I do it. Better said. All right, so I'm going to do one more. Let's see. Link.grt woo njrdn. I saw two. Wow, there's a lot of XCPs. I'd covered TEL already. Let me see. Okay, well, I saw a coin that had two dot. Okay, so I'll do dot that has more than anyone else. I already did. Yeah. Okay, I'll do dot. That'll be the last one. DOT. I've already been an hour and 22 minutes in here, guys. I'm a little tired. I'm old. All right. So what is dot doing here? What did dot do before? Let's see here. Let's get the full picture. All right, perfect. So the market makers, they stepped in right there. They stepped in and said, here's where we're going to stop it. That's it. Enough is enough. Beautiful bounce. Are the bulls here? Are they present? Yep. They stepped in again. They bounced it again. Not as big. They stepped in again. They saved it. It fell below it. It back tested, reclaimed, confirmed. You see the pattern, guys? It's the same pattern almost every single time. That's why I love TA, because you don't have to be that smart. All you have to do is be smart enough to look to prior history to show you the more probable outcome, because these things behave very, very similar. So now what? Well, now that I hit the bottom, I want to see a reversal of trend. How do I do that, BC? Well, I now want to see a high. I want to see a lower high. I want to see a higher high. And I want to see our higher high based off of a continuation fib instead of a reload zone, because a continuation fib is going to give my harmonic pattern a higher stance, a higher price point than if I do a takeoff off of a reload zone. Well, let's see. How did it play out? Why does that, let me turn off my magnet real quick. Right there. There is right there. Look at that. Bounced off of here, gave me a beautiful higher high. So let's see, how high did it go? Did it respect the harmonic? It doesn't have to respect it, but actually the harmonic, I do like taking off the highest point. But if it goes higher, great. If it goes lower, I don't like it as much, but It is what it is. I can't control that. But at least, can I get some sort of... Let's go back here. Let's go back to the... I should have done that on the daily. Okay, perfect. Right here, did we get some... Did it stop? It went a little bit higher. Here's where the projection was. Well, let's see what it did. The projection was right here. We go higher. Yeah, we went higher. We came back, and then we fell. But you know what? This retracement off of our harmonic patterns, when we get the top to the bottom, we look for a deeper retracement to the reload zone. Okay, well, did it go into the reload zone? Here's my high. That's my swing fail. I'm going to go from here. Here's where it started. And here's my reload zone. We didn't make it to the reload zone. Is that a bad thing? No, that just means the market is super bullish. It's great. But did we respect the continuation? Right on the money. Right on the money. Funny how that stuff works out, right? And then we back tested it again, and we went up. We went higher. Beautiful. Okay, great. That worked out awesome. Let me do this. Let me go into the weekly. Let me go back. Where is the current? Okay, perfect. Right here. All right. So what's next? Well, here's the thing. Here. You obviously see on the macro view that we put in a nice low, high, higher low, higher high, but we retraced too deep. We gave it all back. You know what? Let me see this real quick, guys. I want to see this because we were looking at the dailies. That's a different view. That's a smaller view. But now on the macro, on the weekly, how well did this... Here's a swing low. Look at that. I love T. Look at that. Look at that. On the higher time, all this system, guys, these tools, it can work on any time frame. You can go to the 5-minute time frame and you can see the harmonic patterns. You can see the retraces. All of that stuff on the minute time frame. It doesn't matter. It really doesn't matter. So, what now, BC? This gave it all back. It didn't stop at 786. Does it have to? No, it doesn't have to. It's just a good measure, but it doesn't have to. So now what do you do? Well, what you do is you look at the full picture. Remember, guys, we broke. Let me go back here. This is the area where we wanted to hold, but now we're below it. That's not good. Yeah, I'm in a bull run, but I'm here to protect my capital. So what now? How do I play this? Well, the way I would play it is I want to go to the smaller time frames and can I recognize some sort of bullish structure? Can I get a W? Yeah, at least give me that. Can I recognize a W on here? I see the beginnings of a W, but I see something else that's extremely bullish. We didn't quite fire off a W, but we did fire off something that is very powerful, and I recognize. And I talked about this earlier. 3 higher lows. I like this. This pattern, this triple W, if you want to call it. It's not a real technical term. It's just my way of doing it. It usually, more often than not, I guess the best phrase to use, not every time, but more often than not, I see this and it breaks. And it's going to break to the upside. Not a guarantee, but that's a start. So to me, you have to ask, what's the FA? What's the FA? What's the fundamentals? Do I believe in this coin? I don't ask myself that because I do strictly on T8, but I'm telling you guys to be extra thorough because you guys are not traders or you wouldn't be asking me. You guys are not analysts, because you wouldn't be asking me. And you cannot be a trader without being an analyst. Put it that way. Simple as that. I don't know if anybody told you that you can be a trader without being an analyst. They were wrong. They were wrong. You have to be an analyst. You don't have to be a technical analyst. There's many forms of analyst. You can be a TA analyst, you can be an FA analyst, and you can be an MA analyst. There's people that don't know anything about technical analysis and they're traders. How do they do it? They look at fundamentals. And they look at and they're not looking at the day-to-day. They look at the fundamentals, they look at the project, and they say, this is worth investing. I'm putting my money here, and I'm going to wait 2 to 5 years based on those fundamentals. That's an FA trader. There's a market, there's MA traders, market analysis traders, meaning they look at the market and look at demand. They look at news. There's going to be a rebranding. Perfect. I know rebrandings, test nets, main nets, they like to pump markets. I'm going to go in now. Sentiment is low. We just had a sell-off, and this is the roadmap for this. That's an MA trader. Me, I'm a technical trader. I look at patterns like this and say, yeah, I'm stepping in. I'm stepping in with a small portion. Let it reclaim this. I'm going to add, clear this. The rest of my position goes in. Am I worried about catching the Pico bottom? No, I'm not catching the Pico bottom. I'm not smart enough to catch the Pico bottom. But I'm smart enough to catch the meat of the move. That's all I care about. I don't care the Pico top. I don't care the Pico bottom. Give me what's in the middle. Give me the jelly. That's my favorite part of the donut, the jelly. I usually start from the opening hole of the donut because I know that's the quickest way to the jelly. That's me right there, baby. You can call me the jelly trader. I love my job. You know what? I'll give you a link. I'll do one more. That's it. Link, and that's it. I'm tired because I did take 3 days to give you your video, so I do feel bad about that. I just stay really busy, guys. I stay really busy with my. Wow, this looks just like Dot. That was incredible, right? It looks like we didn't even change. It looks like we didn't even change screen. Look, 3 higher lows. Actually, this was crazy. It was almost the same. That's wild. So honestly, I know this is being lazy, but I already did the work. Look at that. I did the work already, guys. Everything I said about actually it doesn't work out that way because look, the macro is going to be different. I'm sorry. I'm just being lazy. Oh yeah, it's completely different. But I mean, the local looked exactly the same. But when you look at this is completely different. This is night and day difference. So I'll give you the proper analysis. I'll give you the proper. So we were in a channel. So this was a clear channel here. So I'm going to look at here. These candle bodies there. Yep, I like that candle bodies there. And where is candle bodies deviation? Okay, perfect. We had a deviation there. But you know what? You see this? I know this is being anal, but that's just when I do technical. So I'm going to see if I bring this bar down, this validation here, does this validation line up better with some of the wicks here? I don't know. Let's see. And this is just being anal. Like I said, this doesn't really matter. Yeah, look, beautiful. Beautiful. I'm holding it there. I feel better about myself, and my OCD is not going to bother me. So I'm going to leave that there. All right. So what do? We broke out of this channel. Boom! With a vengeance. Did we backtest this, please? Because now my OCD will not let me sleep if we didn't backtest it. But this is a weekly time frame. There was 7 daily candles in here that we could easily backtest that I'm not going to see here. So let's zoom in. There it is. Thank God. There, I'm good. I can sleep better at night. Broke out, back test, took off. Boom. Easy. You see? It's the same thing I told you on the other ones. And nothing's changed. Everything lines up. I'm not the smartest trader. I'm not the smartest guy, but I'm smart enough to recognize patterns. That's it. That's it. So what's next? Where is a good projection on here? So let me do this. Let me go here. I'm going to go here for just a second. Reset this. Okay, let me see here. Did we respect it? I don't know. You tell me. I don't know. I'm not smart enough. Boom. I like it. I like it. Okay, so let's study. What do we do? And what's next? So let's do this. Let's up 2.618. Yeah, we rejected right off of there. We blew up. We came right back. We validated it. We back tested it because we blew through it. We back tested that. Beautiful. I like it. Went back to 3.64. We bounced around. Then we made it right up to 4.669. We stopped there. We got rejected. We flipped it. It became support. Did we hit 8.77? No, not yet. That's our next target. That's going to be beautiful at 29. Do I believe it's going to go there? I believe it. When we came back down, it was a drastic drop. But look, we still respected 2.618. Beautiful. Beautiful. There's that pattern. There's that falling, I don't know if it's falling wedge or falling channel, but I love this pattern. This pattern here, I recognize it all day long. I play this pattern. I remember this pattern last year in Bitcoin. It broke out and made a lot of people happy. Let me find it for you. Watch this. Watch this. I remember that. Let's do a Coinbase chart. Let's do, here, let me show you that pattern. Right here. It's right here. It's right here, baby. Right here. Look at this. Right here. Last year. You see this here? If you want to see it better on the daily, you can see it better on the daily. Let me show you. Look at that. Right here. This little falling pattern. Little falling pattern. These break up. These break up. Here is on the, watch this. Let's see if we can identify this. Watch this, watch this. That pattern is a very, very common pattern. When you, off of a drop, you look at those. Oh, this one not so much. This one not so much. After a drop, I guess it's not the same on this particular time frame, but those wedge pattern. I mean, I'm gonna find you one. Hold on, because I see those quite often. But I'm also a day trader, so I see a lot of them more on the smaller time frames. More on the smaller time frames. Here's one right there. There it is, right there. Look, you see this? You see this falling pattern? We usually break up. We will break up. Recognize those. Recognize it. Play these. These like this, it likes to break up, and that's what I'm seeing right now on Link. No, was it Link? Yeah, it was Link. It was Link. This little pattern right here, this little market structure, the way this is set up right here, this has a good probability of breaking up. Is it guaranteed? No, it's not. It's not guaranteed. It's not guaranteed. But I like it. I'm in a bull market. I'm in a bull market. We're holding 2.618. What if it breaks down? Well, when it breaks down, you have a clear area of support right below. A very clear area of support. You have a big gap here. So if you lose this, it's going to come right back here. What I mean by gap is, in my mind, I'm looking at the volume profile. That's what I mean. In my mind, I don't know if it has a gap or not, but in my mind, I'm looking at the VRVP. And the VRVP, probably, if I were to look over here, it's going to have a gap in the volume profile. Why? Because of the way the behavior of this is here. There was no structure. Actually, let me show you here. I'll just show you. Here, VRVP. There it is. Look, I can't make this shit up. Look, there it is. See that gap? Look right here on this. That means that there was no structure, nothing there. Look, why are we holding here? That's the POC. Look, point of control. You notice how we came back and we're always here. Look, that's the point of control. But if you lose that support, you're going to blow through this and you're going to go right back into this shelf or this shelf right in here, which is where a lot of trades happen. A lot of support came in. So let's snap a line there. And let's look, and let me hide here, hide the indicators. And look, you see that? That's going to be a lot of support. So between here and here is a lot of support. That's why I said, in my mind, when I said gap, that's what I meant, a gap on the volume profile. A lot of tools that I use, guys. I'm not going to talk about all of them here, but I do this 7 days a week. I'm pretty confident that I know what I'm talking about. Am I always right? No, I'm not always right. Hell no, I'm not always right. But I'm right more often than not. And I'm in a very unique position where I get to help people make money. I get to help people learn how to do this. And I get messages from people. Go to my Telegram and look at some of the screenshots of some of the thank yous. I just posted one the other day. And it's nice to be able to help people. In one trade, they made what they paid in the premium. in one trade. They paid for the premium. It feels good. It feels good. And they just joined that same day. Boom. They mail, oh my God, this is incredible. I like being able to do that. It feels good. All right, guys. Sorry for taking so long for this to give you guys a video, but hopefully I went in depth enough. I covered almost all the requests, and it's up to you if you want to continue to learn. If you don't want to continue to learn, you want to stay where you're at, you're happy where you're at, stay where you're at. No big deal. But for those who want to improve, for those who want to be better and are willing to put the time in, come check me out. Have a great day, guys.